Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. We want to let you know up front that we just came out with our annual Best Online Broker Survey results, so you can check that out on our website. And there you'll find out what investors just like you feel, how they feel about the various brokers that are out there, who ranks best in different categories, and then see if the broker you currently have is right for you or if you want to try something different.
Now, we are recording early because I am once again out on the road. So part of this has been recorded early. But
we have a lot for you. We're going to have a super stock review and play another round of Should You Buy This Stock?
Which is really fun.
It's always
fun. This is one of my favorites that we do. But first, Matt is going to take a look at the market, which will be after the close on Friday.
As Amy mentioned, we recorded some of the show earlier in the week since she's off to Atlanta, but let's take a look at how the market closed on Friday. Yet again, the market flashed a lot of up and down seesaw action as earnings season continued in full swing. Along the way, we did get a follow-through day on the S&P 500 on Tuesday, so that does kick off a potential new uptrend. But note the cautionary tone of the big picture for that day. It starts with the headline. Market follows through, but leadership still fuzzy. So that's a good example of why you should always take a few minutes to read this column and not just rely on what the current outlook says. And that's, of course, especially true at the start of a potential new uptrend since, as we note, not all of them gain traction. And the article can help you with the nuances of what's going on. For example, in Tuesday's Big Picture, Ken Shreve noted that the S&P 500's 1.4% gain didn't exactly convey power, but it still must be respected. A follow-through day doesn't mean that the market is about to rip higher, but no bull market has ever started without one. Ken also noted that it's always good to see the market serve up buy candidates on a silver platter, but the platter was mostly empty Tuesday. And as you can see, on Wednesday, the market reversed with the S&P closing over 1% lower on volume that was above average and higher than the day before. Now, often when you see heavy volume selling right after a follow-through day, it often sounds the death knell of a new uptrend. But at least so far, that hasn't been the case. Both the NASDAQ and the S&P 500 bounced back on Thursday and Friday. The S&P was up well over 2% and volume was rising and above average on Friday. Now, in terms of earnings season, it was a mixed bag. Amazon and Facebook were among the two biggest names to report this week, and we'll talk about them again a little later in the show, but note that we recorded those segments before they reported. Amazon sold off Friday after reporting after the close on Thursday. It fell far short on earnings and revenue was also light. But it's not clear just yet what that means for the stock going forward. Of course, that kind of heavy volume drop is certainly not ideal. But Amazon did manage to find support right around a prior buy point. So see if it can turn that area into a floor and start climbing back above its 50-day line. Facebook got a very different reaction to its report after the close Wednesday. It gapped up the next day to close over 15% higher on volume that was 283% above average. Volume was well above average again on Friday as Facebook moved higher and cleared a 110.75 buy point. At the close, it was still within a 110.75 to 116.29 buying range, but keep in mind that this has been an erratic market, and if you buy Facebook or any other stock, be sure to have a defensive plan in place just in case. We have another big week of earnings on tap, and it kicks off with Alphabet on Monday. Then we have several big energy names reporting, including ExxonMobil, Royal Dutch Shell, and ConocoPhillips. We'll also see how badly Chipotle was hurt by its E. coli and norovirus outbreaks. Now, as we all know, it continues to be a challenging and uncertain market. So stay flexible, stay disciplined, and don't try to fight the market because when you do, you usually lose. So it is time to play another round of Should You Buy This Stock? A little simulation, and we'll reveal what stock we're talking about a little bit later, but first let's take a look at the chart.
Now, it's fun to do this and really go week by week to think about what you might have been thinking. So looking at the chart, it looked like this stock might have been forming a new base. And based on its history, the anticipation would be that it would break out and move higher. Now, a couple of things to note here. Look at the volume sell-off that was high. That was the potential left side of the base, but there was a lack of accumulation on the right side.
Now, the relative strength line was below new high ground, but it was trending higher. And the company had shown strong growth in recent quarters, and the stock was back above its 40-week moving average. But note how the shorter-term 10-week moving average line was still below the 40-week line. So that shows lingering technical weakness. And if you looked at the market outlook at this time, it said uptrend under pressure. So weighing all these pros and cons, you might keep the stock on your watch list and wait to see if it breaks out by clearing this point of resistance on the left.
Then the week of July 25th, the stock ran into trouble and pulled back 9% for the week. That is a hefty little pullback. Now, if that wasn't bad enough, the following week, August the 1st, it fell another 5%. And look at the spike in selling volume. We had 32 million shares that were traded the first week down. We had another 25 million shares that were traded the second week
down.
That's
a lot of trading.
Yeah, as Bill says, that is not your Aunt Sue trading. Those are the pros.
Now, the good thing is the stock never broke out. So as a disciplined investor, you wouldn't have bought it, so you wouldn't have been caught in that pullback. And that's a good lesson for the current market. Avoid head fakes by waiting for stocks on your list to break out on good volume in a strong uptrend from a good solid base.
Yeah, now this stock is Amazon, and the week of September the 5th, 2014, it looked like it was once again trying to move higher. But the next week, Amazon dropped 7%. Patience is sometimes key with these stocks, and that's why having both a ready list, which are stocks that they're just coming out of proper bases ready to break out, and a universe list are necessary. Now, this second list, the universe list, is going to contain names on your watch list. They're not quite ready, but they're ones that you should keep your eye on.
And that is an important list to keep up to date, absolutely. Now, fast forward a bit to January 23rd, 2015, and you can see how Amazon started flashing a potential more aggressive buy point. We actually talked about this on an earlier episode, where you can draw a trend line to spot an early entry. So for Amazon, that would be when it crosses this line. Now, since it's a more aggressive buy point, make sure you have a sound plan for cutting your losses if this kind of breakout doesn't work.
Now, that was definitely a very early and aggressive buying area, but it did move above the trend line. Now, the next week it zoomed higher. It was up 13%, and this was after the company reported earnings. Volume swelled. 41 million shares were traded for the week.
Right, and from there you can see how Amazon made a big run until pulling back more recently. Also note how if you missed or chose not to buy into that more aggressive entry, Amazon gave you another opportunity in April when it jumped out of this very healthy, tight trading area after reporting earnings.
Now, we hope you had fun with another Would You Buy This Stock? It is fun to review these past big winners so that you can handle them properly in the future.
How would you like an edge that helps you pick winning stocks faster? An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you basis, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
It's time for a super stock review. This is really fun to get motivated and to see these monster winners from the past and what huge gains they made. And we will get these gains again. So today we thought we would look at a stock that IBD chairman and founder did very well with. That's Bill O'Neill, did very well with this back in the day, and that stock is Amgen.
And the time in question here is the early 1990s, and as you can see on Amgen's chart, the stock formed a double bottom base and broke out in February 1990. Now, even though that was a good 25 years ago now at this point, note how the same pattern formed. These stocks continue to form the same patterns decade after decade. So that was an opportunity to get in early on a stock that definitely went on to make a huge gain.
Now, notice that this was a newer IPO which came public in 1989. And remember that newer companies are the ones that tend to make these huge moves. If they have a unique service or product that's in big demand and they've got big earnings and sales. Amgen had developed a drug to treat cancer patients suffering from the side effects of chemotherapy. Now, the drug had immediate results because it quickly, while the low white blood counts were low, it helped raise them up.
Now, that innovation also helped drive multiple quarters of triple-digit earnings growth, and that's what ultimately propelled the share price higher. And boy, what a run did it have. The prices here are split adjusted, but it made about an 8-fold gain from just February 1990 to just the end of 1991.
That's not very long. That's almost a 10-bagger. That's a huge move. So this was a 10-week hugger. Now, we've mentioned this before on the show, but monster winners often hug that 10-week line and nicely and tightly as these stocks make their big runs. And if investors catch these stocks early in their move, it is possible to add to your position along the way, and that will really boost the performance of your portfolio.
Right. Now, as we all know, selling and holding really is the toughest part of investing. Buying is relatively easy. But it's much easier to hold or sell at the right time when a stock consistently finds support at the 10-week line. And once you have a decent profit cushion, you can use that line as a benchmark to see whether you're going to sit tight or cash in your remaining profits.
Now, what companies today are potentially, we're not going to predict, but potentially doing something really innovative and that's creative that might really add to their future moves? So let's take a look at two giants that are sitting on a whole lot of cash, and they are proven innovators.
That's right. Now, Facebook certainly counts as an industry leader and innovator. And the social media giant is still a relatively new IPO. It went public in May 2012. So it may have some very good years still ahead in terms of its stock. And that's especially true if it continues to grab mobile advertising dollars and successfully monetizes other platforms that it's purchased in recent years or developed, including Instagram, WhatsApp, and its Messenger app. And that Messenger app, by the way, has over 800 million monthly active users. And Facebook itself has north of 1.5 billion. Now, we reported this week that a Rosenblatt security analyst thinks Facebook is on the verge of dominating mobile advertising in the way that Google blew past Yahoo to dominate paid search over a decade ago. Now, of course, Facebook stock, like everything else, is going to ebb and flow with the market, and there's going to be ups and downs. And this is certainly not a recommendation, but it has the potential to be a long-term market winner.
Now, for now, Amazon dominates the online e-commerce business as more and more people to choose to shop that way rather than to head out the shopping malls. Now, will that change? Possibly. And where could some competition come from? I have in particular noticed that a lot of companies are starting to offer that free shipping.
Yeah, you're seeing the Amazon effect across all of retail. Now, also, through the Amazon Prime service, Amazon now has more streaming subscribers in the United States than Netflix. I was surprised when that came out. So while the market and stocks are certainly going to fluctuate, you want to keep an eye on innovative leaders like Amazon and Facebook that have the potential to become or continue to be super stocks.
So be sure to check out our online broker survey. You can see how that came out. And also, if you have not been there yet, check out the new investors.com.
Right. We'll see you next week.